And it says we are
live
on Facebook. Greg Jemmeson, welcome, and thank you so much for coming on the show.
Thank you, Mark.
Commercial rents. I received some information about 48 hours ago, and as an agent who's native in English could not make any sense of the legislation that came through, needed to call you and asked you if you could come on the show and explain to our landlords, clients and viewers what the changes in commercial rents for COVID-19 actually means.
Okay, thank you, Mark. As we know, these are very difficult times we're in, things that are unprecedented that none of us really foresaw. And one of the things I want to let you guys know is that we now have a mandatory national code in respect to commercial leasing principles. Now, when I talk about commercial leasing, that includes retail, commercial and industrial properties. And the code has been drafted in a very quick manner. And as we spoke earlier, most legislation takes a long period of time, a lot of discussion and consideration. So given these difficult times, we can't sit here and criticise and say, let's pick holes in this code. The code is here to try and assist everybody. It's been put together in a way where everybody takes a little bit of the hurt. The landlord will take a hit, but so will the tenant. And the whole idea of this is to try and share the burden right across society and that not one person takes the whole hit. So when I discuss what all these principles are about the code, please don't try and be critical of them. Let's try and work through them. This is not a time to be trying to drag them into the High Court and discuss whether it's valid or not. It's about what's in the best interest of everybody. That's right. Let's try and work together. And I also say this is a time for real estate agents to really shine. It's a time for them to step up and not just be rent collectors, but actually work in the best interest of their landlord and their tenant so that we all get through this crisis and get through on the other side and still have a viable economy. Okay.
It's definitely changing times, and I think it's like you said, it can compound because there's so much happening in a landlord's life or in a commercial tenant's life at the moment. This is one of many pieces of the puzzle that they're trying to all put together. Now, it did take a long time for this to come through, and just to qualify you, Greg, and to everyone in the audience who may not know you. It's going to be hard to be modest on this one, but if there's any business that sells within Australia that's a real estate company, generally Greg and his firm will be acting for the buyer or for the seller on a national basis. So when we need clarification on mistakes that we've made, laws that are out there, you are the person that we go to as an industry and say, look, can you give us some clarity around this? So in terms of your qualifications to give us clarity around this legislation, ladies and gentlemen, this is the man that's qualified for it. But take it away still, sorry. I just wanted to mention that. Now, at the moment, so this is an awful thing to admit as a real estate agent, but at the moment, Greg, I look across our business, we manage a lot of commercial and we manage a lot of residential. When I look at particularly the commercial portfolio and the arrears that are sitting in our commercial portfolios, I'm very concerned. And so I can understand landlords being very concerned and tenants being very concerned. The tenants are being concerned because they're not paying. The landlord's being concerned because they're not receiving. So but it's not all tenants. And that's where the hard thing is, how do you clarify between the cheeky tenant and the tenant that just wants that's actually genuinely going through hardship? How has government done that within this legislation to sort out the difference?
There's two words that the government keep banging on about: good faith. Now, we know that during this process, there will be people who will be looking for loopholes, will be looking to avoid paying rent.
Yeah.
This is where a good property manager will get in and look at the business. And you're not accountants and you're not financial advisors. But what you need to look at is getting proof from them through their profit and loss statements, reports from their accountants or from their bank as to whether their income has reduced. So one of the first critical keys is it's a small business. Now, small business, the government's defining as somebody who's got $50 million turnover or less and has a 30% reduction in their income. Once they have that 30% reduction, they are entitled to register for JobKeeper.
That's a big one.
Which is to pay their employees to keep them there at the end when we come out of this.
So that's the first trigger, Greg.
That's
so
for you.
That's
Makes
the first
it
trigger.
easy.
You don't go past. If you don't get past, if you are not on that JobKeeper, there is no reduction on rent for a tenant or for a landlord. So the first step in this one, like, ladies and gentlemen, is we have to qualify. Now, do we have to read that in writing?
I'd want to see that. Again, it doesn't clarify anywhere in the code that it has to be in writing, but it says that you need sufficient and accurate information. Well, to me, that is sufficient and accurate information. If they've been registered for JobKeepers and it's been approved, then we're past the first hurdle. Then, as to working out what relief they get, will be on a case-by-case basis. It's pretty simple, is that if a business has had its income reduced by 50%, right?
Yep.
Then we have what's called waiver and deferral. So some of the rent is waived.
Can I ask you to do one favour for me?
Yeah.
Can you use a different percentage? Because I know this is going to throw everyone off on a bum steer. Can we use like maybe 60% or 40%? Because
60%.
I know.
Okay.
Yeah.
Okay. Well,
you'll see in a second, guys and girls, why? Because it goes into further. Yep.
Okay. So one of the example that's in the code talks about a 60% loss in turnover. So with a 60% loss, so it's now only receiving 40%, they are guaranteed a 60% cash flow relief. What that means is 50% or more of that 60% is waived in rent. So they essentially get a 30% rent reduction. And the other 30% is deferred to be paid at some later date. So during the pandemic crisis, while JobKeeper is still in place, that business will now be paying 40% of its previous rent. When the government says the pandemic is over, 30%.
Yep, 30%. Yep.
Yeah, 30% then crystallises, and they have now a 2-year period to repay that other 30%.
Okay.
Right? Now,
okay. You use the word crystallise. I may use the word landlord loses, dumps, trashes, burns.
Now, bear in mind, we now have, at the end of that period, that extra deferred payment. That doesn't mean that tenant is still going to be able to pay it, because they may have, as a result, their business may have gone into liquidation, bankruptcy, and there is no way you're going to be able to recoup those funds. This is times where you would hope you would have some form of landlord insurance. But again, even though we're deferring those payments, there is no 100% guarantee you're going to be able to recover those, because after the 2-year period, if they haven't been able to make the payments, well, then it will crystallise into a debt, and then it would just be normal debt recovery through the courts.
Got it.
Okay. One of the other situations, you say, well, what happens if the business has to close because it's a pub, it's a nail salon, some of the businesses are being forced. It might be a small shoe store. They've just closed because there's just not enough. So
they've put their hands up and they've said, can't do this. There's no coming back.
Yep.
I'm out of here.
Well, that's a different conversation.
Okay.
We'll come back to that one. But we've got a good small business, but because of the social distancing and the closing down of certain sectors, it might be a small gym. So they've had to close. So their revenue has fallen by 100%, right?
Yes.
What happens here is immediately they get a 50% waiver, and the other 50% is deferred until they come back online, right? So for 6 months, there'll be no payments whatsoever. When they open their doors again, the 6 months, 50% will then fall due and then be a payment plan for the next 2 years.
So I'm a landlord. I've got a gym. The gym's paying $100,000. Let me do $10,000 a month in rent. Gym can't operate.
Yep.
You mentioned a curly one before on this. We're going to come back to this. Gym has genuinely gone down to zero income. Genuinely.
Yes.
So the landlord is going to cop on the chin by law $5,000.
That's it. That's waived. That's gone forever. 5,000 every month until we open up again.
Okay, until the COVID-19 period.
Yes.
Now the landlord also will get half of that rent back
as a deferred payment.
As a deferred payment after COVID-19 is finished.
Yes. So when the government says that, well, what we're saying is we're really linking it to JobKeepers. So when JobKeepers comes to an end, that's when the government is saying we're back, the doors are open, we're back to business. So then we've got, say, 6 months period, we've got an accrued deferral of $30,000. We now enter into a 2-year payment plan for that $30,000 to be paid back over the next 2 years.
Got it. Now, can I pause for 1 second just to ask a couple of questions that are on screen here? Rosalind Hope has asked, has the code for commercial property been released?
Yes, it's you can get it online. I haven't got it with me, but I'll send through the link so you can then forward it on your Facebook feed. It's a fairly, don't read too much into it. The simple example is you go right to the very end and they give an example of how it works, which we just ran through with the 60% loss and the 100% loss. Then it's a matter of case by case. There's things like if there is a reduction in land tax and council rates, then the landlord is meant to proportionately pass that on.
Really? Which is it? Yeah. Which it's also, that's a leading statement. I like where that's going. It may then mean that in the next couple of days or week, we're going to get relief on those things. Okay.
Yeah.
That's big.
Yeah. So we've got to remember a lot of this is very fluid. Though we now have a code, things will change within that code, within each different circumstance. Now, of course, some landlords are going to say this is so unfair. If they will not pass on that rent reduction waiver, then this matter goes to binding mediation. Now, in New South Wales, in particular, and other states as well, that will go to the tribunal. There's a retail section at NCAT, QCAT, VCAT, etc. But where you have a commercial lease or an industrial lease, that will be very different because a lot of those are drafted, particularly by the solicitors, and they may have their own arbitration mediation clause in it. So before you go racing off to the tribunal to mediate, you need to go and review the lease to see what is the appropriate form of mediation arbitration dispute clause. Okay?
Yeah.
In general, though, if you're using which a lot of solicitors use, is the law society lease, that's silent for commercial and industrial.
Yep.
So they would then go to the Small Business Commissioner for purposes of mediation. Bear this in mind. How I see and my forecast is the mediation is going to be pretty ruthless and is pretty much going to be in favour of the tenants. So don't try and get there and argue. And I don't think you're acting in your landlord's best interest by dragging him into a long, protracted mediations, particularly with the legal costs that flow. That's what everybody's trying to avoid.
Those lawyers charge an arm and a leg.
They do indeed.
Yeah. Now, why would a landlord possibly try to dispute this?
Well, if they don't believe the tenant is being acting in good faith in what they're saying their reduction is. But again, look at examples of restaurants. Obviously, a restaurant they've closed their doors. They can't have diners sitting in the restaurant. But they've been smart and they've been able to outsource to takeaways, whether it's through Uber or pickups locally. So they've still got income. But one of the other things is with that income, they've also got a reduction in costs because they've no longer got all their casual waiters, bar staff.
Job saver.
Well. So there's some of the things that need to take into account. They can't immediately say my income has reduced by 50%. They've also got to say, yes, but also my outgoings have gone down by 30%. They're the things where I think we may go down the path of being some arguments. And again, that will be a case-by-case basis.
I think that's absolutely right because you may, and that's the reason why my toes curled up when I talked about the gym getting zero income because sometimes the gym has deployed 10 of their trainers to go work in a park, one-on-one with their customers all day, every day. So look, we don't want you training in the gym. We now want you in 10 different parks during the day, and that's revenue. And that revenue has to be considered, has to come back into the business. That has to be considered in the rent evaluation of the landlord, which I've got a funny feeling will not be. And that's where a landlord may have for a dispute to say, I don't believe that it's gone to zero.
This is where the property manager has to understand the business.
Yep.
Not intimately, but have an understanding of the business of which they're looking over that lease and asking some robust questions. But then look at it this way. When that tenant had first entered into that agreement, that commercial or retail lease, you would have done your due diligence, business plans, etc., to see that they'd be able to afford to pay that rent. You don't just put them straight into that property without doing that due diligence.
Yeah.
So what you're doing...
Novak.
No. So what you're doing now is essentially doing that due diligence all over again to prove
that's right.
what they can afford to pay.
Isn't that interesting? Isn't that interesting?
Yeah.
So there's some good questions coming through. Tony Quatcherville has asked, does this still need to be gazetted?
No, it's out now. It's in force as of 3 April. Now, one of the interesting things is, what if somebody was in arrears prior to 3 April and you haven't commenced proceedings?
This is a big one.
I suggest you're trapped. Again, to a degree, one of the things it says, the tenant must remain committed to the lease, subject to any amendments. But if there's any failure to abide by the substantive terms, they will forfeit any protections under the code. So my way of reading into that, and again, this is untested, is that if we say to somebody, okay, you're in arrears, that's going to accrue. We can't really enforce that now, but that's going to fall due at the end. You've now got a reduced rent. We've waived a percentage of it. Your rent is now $2,000 a week. If they breach and fail to pay the reduced amount, I would suggest that's a substantive breach. But again, they talk about you not being able to evict. So a lot of their protections will fall away, and this will really only be tested once we come out the other side. And then we say, well, during the protected period, they didn't pay the amount they were meant to pay. the reduced amount. So therefore, does the full amount fall due? We don't really know at this stage. So a lot of it is, again, we won't know until we're out the other side. Yeah.
So, Greg, the interesting question, some landlords took a knee-jerk reaction to COVID-19, put in place chopped rents for their tenants, renegotiated rents on their tenants. Does the tenant now get to double dip?
No, I'd go back and say no. That's a case-by-case basis. We would turn around and say, we've already taken that into account because we were ahead of the game. By the way, a landlord is entitled to give a bigger waiver than the 50% if they want to. They're not bound. They must give at least 50%, a minimum of 50%. They can give more if they want to. But again, I understand landlords have to live as well.
Okay. Alicia Cretan has asked, but why do investors need to be out of pocket because the business, which is the tenant that's in there, has dropped in sales revenue? So why should a landlord cop it on the chin?
Why should any? Again, this is an international problem. It's a problem that government has said we all have to carry the burden. It's not a time for one particular sector to profit over everybody else. It's essentially, as Australians, we all pull together and share the pain equally. None of these businesses who are renting premises had any intention of their income dropping. They didn't ask for the virus. It's just one of those things that we have to share. And I understand. I fully understand that nobody wants to be out of pocket, but during these tough times, we all have to share the pain.
So online business, so they're a pizza delivery company. They have a pizza shop. You'd suggest that that's going to be that's a one business.
That's an interesting thing. That's what we talked about. Is the same with the restaurants who are now going more to takeaway. If that was just a pizza delivery, it wasn't for pickup, then in actual fact, they may have increased their income during this crisis. So, again, that would be looking at their P&Ls. And if their P&Ls haven't changed substantially, they're not entitled. There will be people who will not be entitled to a reduction whatsoever.
Okay. A lot of questions coming through here. So, Emil, my client is on terms of 30 days and 60 days. So my income today is not reduced, but will certainly be reduced in the next coming months. Yeah.
And again, this is not a code, and the negotiation doesn't all have to happen on day one. Different businesses and in their maturity, it will take time. It will take time for different businesses for it to really take effect. Now, they might be fine today, but in 2 months' time, their income's dried up. So they then negotiate at that stage, not now.
Got it. I've got someone asking questions. Please ask through Facebook so the viewers can see. So I've got a question from Michael Burgio on the screen here. What if business is down 80% in revenue, but still open? Does the landlord still have to waive 50% of the rent and recoup 50% back?
Yeah. So in that case, they're down 80%. So they would get a 40%
in revenue, but still open. Does the landlord has to waive 50% of the rent and recoup 50%?
So they're in that case, their revenue's down to 20%.
Yep.
So they would get a discount of 80% of their rent. 40% would be waived and 40% would be deferred until a later date.
Okay. All right. And so what else have we got here? Great feedback. Thank you, Alicia, helping people out. That's great. Can you please have a chat about financial hardship for the landlord? We're sharing a lot of the pain.
I understand that. Now that becomes a question. A landlord, if their business is of renting properties, a landlord I would believe, if they've had a reduction in their income, would potentially be entitled to JobKeeper themselves.
I never thought of that.
Everybody. I mean, it was interesting. We had somebody come through.
I never thought, like, ladies and gentlemen, Greg Jemmeson, what a call. That is huge. That is
JobKeeper.
Hang on a second.
Yeah.
Yeah.
Right.
Wow. Okay. So just to take that question from the top, just say you may be looking at me thinking, why do I look so stunned and amazed if you miss what if we just missed what's said. So a landlord, if they've taken a revenue drop, may be entitled to going on to JobKeeper because they've taken that revenue drop from a tenant's income. Wow.
Yeah. Potentially.
And look into
it. As well, the landlord would be entitled to go to their bank and have a freeze on their mortgage for 6 months. Interest will still accrue, but they won't be paying the principal. So,
I think landlords very quickly their toes curl up when they hear that because they're actually still effectively paying more. But I think in a humble way, you're not having to sell your property.
No.
There's no, you're not losing a good asset. You're not put on your knees very quickly. It's done very slowly. But I think that I know what landlords' beef about all this is, and I actually think it's true. But I also don't think that landlords should take a finite opinion on this. I think you, as a landlord, you should still wait because I know there's more still to come.
Yes.
And like you just read in the legislation, there are comments about adjustments on land tax. Was it only land tax you read out?
Land tax, council rates. Yeah.
Yeah. So some of my clients are paying just on one property $50,000 a year, $80,000 a year on land tax. And if government turns around and comes across and says you don't have to pay anything through COVID, or if government comes along and says you can pay less through COVID, it's not bad. Yeah. So just wait, guys. Don't be too hard on the decisions yet.
Have a lovely Easter. One thing is keep an open mind. We keep saying this over and over again. This is a fluid situation, and though the code is here, there will be things around the code and around the whole situation that you need to keep abreast of for the benefit of yourselves and the benefit of your clients.
Okay. Michael Berger has a question. If I have a tenant who got a great deal when leasing the property, market rent was $800 per week, and they leased it for $400 per week, and now the landlord has to give them another 50% reduction on rent reduced already. Is there any case for that?
Look, again, case by case. How long ago did we reduce it to the 400? If it was at the beginning of the crisis, we reduced it to the 400. You might be able to argue that was part of it.
Pre-crisis, sounds like a no.
Yeah, we were ahead of the game, and in good faith, we reduced your rent prior to the mandatory code coming out. So that doesn't mean another reduction again.
Now, there's also a trigger. There's also a trigger on the 1st of March, which COVID, the job seeker, has been ratcheted back to. Although
so 1 April. So
1 April.
1 April is when
I think job seeker goes back to 1st of March if you qualify.
Job seeker, but JobKeeper.
JobKeeper.
So originally there was the job seeker, which was everybody were putting all their staff on leave without pay, and so they'd go to Centrelink. But then they decided that's no good. Bring them back, put them on JobKeeper. JobKeeper payments to employers are paid on 1 May, but are retrospective back to 1 April.
Other way around.
Yeah. So forget job seeker. We're all talking about JobKeeper now.
Then this legislation is not consistent with those dates.
Nothing's consistent in any of this at the moment. It's again, as I said, it's policy on the run, and there's not a lot of technical clarity around them as far as dates and that go.
Okay, cool. And I just think final questions. I think we've done a lot of questions here, guys. Anything else you want to mention that you feel passionate about on this, Greg?
No, again, this is a time for agents, as I said, to shine, to actually show why people use them to manage their properties. You're not just a rent collector, that you're there to get the best possible results for everybody. And step up to the plate now and get all your landlords, get all your tenants through this difficult time, so that when we get out of this on the other side, whether it's 3 months, 6 months, 9 months, there's still a viable economy. There's great businesses around, happy landlords, and we all take a bit of a cash hit, but we get on with life afterwards.
Yeah, because look, it's definitely, and I think also, look, guys, I know we're talking about commercial, but as a landlord, you've decided to take this risk. Now, I think as a tenant, you've decided to take this risk. Now both people are exposed for the risk that they've taken. I'm in the same boat. Don't get me wrong, and I get paid by my landlords. Don't get me wrong. I know which side my bread's buttered on, but I think certainly the government's approach with saying, you know, guys, you're all in this together. Just work it out. At the end of the day, no matter how this pie gets sliced, we're paying for it probably for the next 5 or 10 years in our lives. You know, if it's a job keeper, seeker, you know, benefit or whatever that's coming through. So very interesting how it's all going. But mate, you're a legend for doing this today.
No worries. My pleasure.
Except for the manly. Did you put that up for me?
Look at that. Very good, isn't it?
That's awesome. What else? I think we covered everything, guys. I'm just going to see. My income is rude. I think we've got all those. Mitch, everyone, thank you for your questions following through. I hope we helped everyone on here today. Great audience, and I'm sure this is a lot of clarity for people out there that don't read that code or can't get access to that code. But even when I read that code, I'll say it again. When I read that code, I was still lost. I read it again. I was like,
what I'll do is if you put comments on Facebook, I'll have a look through, and if there's any questions there, we'll try and answer them as best as we can.
Yeah, perfect. And now just you've been very kind with your time today. If I could just spruik a little bit for you. How you are able to help. You've got a team of lawyers there that are able to help landlords that are in a bit of a pickle.
We can. If there's we can do the mediation. We do commercial and retail leasing. Predominantly, our clientele is predominantly the real estate sector and real estate agencies. So they're our first port of call, assisting the industry. But we also, as I said, help a lot of landlords and tenants if they're required.
On that, and that's going to be particularly big at the moment. And guys and girls, stay tuned for the residential. This was the commercial piece of how it's going to be handling it. But there's a residential piece that should be coming out. Do you know when that's going to be?
Apparently over the weekend. That's the latest. The latest information I have is that the government is looking that there be no moratoriums on rents, and hardship will need to be proven. So we're not going to go down the path at this stage of waivers and deferrals of payments like we have with commercial. But again, it's supposed to come out over the weekend. So I don't want to pre-comment on it because we don't know exactly what it's going to be.
An Easter present for landlords and tenants.
So again, it'll be each case on its own merits.
Crazy times.
Interesting. Yeah.
Interesting times. You've helped a lot of people, thousands and thousands. I think the last time we had you guys on, I think we had 25,000 views of the segment 2 weeks ago. So you guys have helped a lot of people for free. Today you've done that again. And all I ask, ladies and gentlemen, is if you do need a good lawyer, it's property-centric, real estate agent-centric. You guys do accounting as well, apparently.
As well, very much. And again, real estate centric accounting. Yeah.
Yep. And then you are in the CBD of Sydney.
Melbourne and Brisbane.
Ah, you're across all three.
Yep. And we do national. Yeah. National.
Greg, thank you very, very much.
My pleasure.
Cheers,
Thank
mate.
you, Mark.
Take care. See you, everyone. Hope it helped. Bye-bye.